I don't believe him. I'm sorry. Sorry, Dave. What you should really be focusing on, in my opinion, is how to make the most amount of money that you can make. That is absolutely hilarious. This gentleman, he's confused. There's a lot of ancillary tokens in there that are just completely hype and not really probably going to amount to anything. But hello, everybody. It's Mike Preston at New Harbor Financial Group. We thought it might be fun this week to talk about financial media and talk about financial influencers and give you some feedback. So we're all inundated by whatever it is, TikTok, Twitter, YouTube, Shorts, whatever it is. And I'm guilty of watching these a lot, just like a lot of you are, I'm sure. We wanted to just basically give you my reaction to some of these videos. And, it'd be good to just take a look at these things and stick around to the end of the video and realize why you shouldn't believe everything you see. You shouldn't believe everything you hear. We told that as kids, and absolutely it's true. Don't believe everything you hear. Please subscribe to our channel down below and like this video. Comment down below. We do read the comments. And in the bio, there's a link you can reach out to us and have a conversation. Without further ado, we will take a look at some of them and give you my reactions.
You wanted to be financially set, so you did trading crypto.
Yes. I turned 40,000 into $500,000 in 10 days. I'm using a lot of tools, fundamentals, trading charts, and I'm also using astrology.
All right. Was that a joke?
No, seriously. The two biggest black swan events in crypto, FTX and Luna, happened on the day of the eclipse in Taurus and Scorpio, which is the money houses.
Yeah, so, it sounds like there's always something at any time always happening, and when things happen, we can assign it to be that, even though the universe is random as
the man who invented our phone, Steve Jobs.
Yep.
He went to India to study Vedic astrology.
Sorry, I don't mean to on you for astrology.
No worries.
That's always been one of those things where it just kind of annoys me a little. What went wrong?
So
I bet on the wrong star?
Because of the FTX and Luna, I lost 70% of my portfolio. But then because of my ADHD, the only way I could trade was when I was on excessive amounts of stimulants, caffeine, yerba mate. When I'm on that, it's like if you gave me a sniper, I would have made the shot. I had that level of focus. I could have made 1.7.
All of trading is, if I did the other thing, this would have happened, but that's not how.
Yeah.
Well, that TikTok is interesting. This gentleman talks about taking 40 or 50,000, bringing it up to $500,000 trading crypto. Those types of gains are actually possible in trading, but they're not possible without a lot of risk. You've got to use futures, you've got to use leverage, you've got to use options, or any mixture of the above, and you've got to be right on the timing. And on top of that, you've got to have an iron stomach. It's something that only comes with experience, an iron stomach, and it's not something I'd recommend to most people. I've seen it myself. I've been through it, got the experience to have been there, done that on my own. Not even talking about managing money for clients, doing it on my own. It's a very difficult thing. And I don't recommend that type of leverage trading on the short term for most people. It's just not worth it. You don't need to do that to reach your goals. And there are stories of people out there that have made tons of money quickly, and there's no shortage of them on social media. But the problem is it's this survivor bias that you're seeing. You're seeing the ones that have actually had success, and you don't even know that those stories are real. They could just be stories. But let me tell you from experience, it is possible to make those types of gains, but for most people, it's not worth it. You've got to be right. You got to have the bankroll. You've got to have a psychological nerves of steel, and you've got to basically take your gains and keep them. Most people that have short-term luck or beginner's luck will double down or triple down, and they'll end up losing it all anyway. And this gentleman talks about having to be on stimulants to trade well. Let me tell you, you don't want to be on stimulants on top of being anxious all the time with these types of things. So I'd be happy to chat with anyone who wants to talk about how one could potentially swing for the fences if that's what you wanted to do. In general, I don't recommend it. Just take these clips as entertainment.
Stop buying coffee for $5.50. You go to work, you spend $15 on a sandwich. What are you, an idiot? It costs you 99 cents to make a sandwich at home and bring it with you. You start to add that up every day, it's a ton of money. Most people, particularly working in metropolitan cities that are just starting out on their job, making their first $60,000, piss away about $15,000 a year on stupid stuff. And that's what they should stop doing.
All right, so Kevin O'Leary talks about spending $5 at, on lattes or cappuccinos. And you can run a spreadsheet, you can run a financial calculator, and if you invest $3 or $5 a day starting at a very young age and it compounds over your lifetime, sure, you can have a bunch of money at the end of your life. But I don't necessarily think that's where you should be focused. I think mathematically you can make that argument, but you have to live too. Let's not forget that you only have one life and you have to live. You have to enjoy your life, not worried about buying a coffee every day, for instance. What you should really be focusing on, in my opinion, is how to make the most amount of money that you can make. That is, focus on building your skills. Consider being an entrepreneur, running your own business. Take risks where appropriate, particularly when you're young and you've got more runway to recover from that. Invest your money wisely over the long run. And for a lot of people, that might just mean passively investing over a lifetime. It's hard to argue passive investors here. We're active investors, but I'm talking to the masses here, I hope. If you can get a good manager or a good advisor or learn how to do it yourself, that's great. Active management should actually do better over one's lifetime. But passive investing, particularly when the market's more reasonably priced than it is right now, which I think at least young people have a very good opportunity of encountering a time when there's really low valuations and dollar cost averaging over their life. I think that's more important than saying to sacrifice. I mean, life is not necessarily about sacrifice. There's some of that, but it has to be balanced with living. Get the big things right, what you're going to do for a career, what your skills are, where you're going to take your risks. Don't worry about the little stuff like this.
If you could borrow $1 billion, 0% interest for 10 years, would you do it?
No.
Even though you could put it in treasuries and pay it off after the 10 years. You could lock in 10-year treasury right now, 10% or 5%.
No.
It's not worth it.
I don't borrow money.
There we go.
All right, Dave Ramsey, I think this says he wouldn't borrow $1 billion at 0% interest. I don't believe him. I'm sorry. Sorry, Dave. Feel free to argue with me if you disagree. But and again, trying to be fair in these clips, all I'm seeing is a little clip. Maybe there's a lot of context, so this is probably not a fair exercise. But that's absolutely probably not what Dave would actually do. If you were offered $1 billion that you could borrow for 10 years at 0%, you could invest that $1 billion in a 10-year treasury at roughly 4% a year. So you could make $40 million a year, risk-free, for the next 10 years. Who wouldn't do that? I would do that all day long, and so would Dave.
The U.S. government can't go bankrupt because we can print our own money.
It obviously begs the question, why exactly are we borrowing in a currency that we print ourselves? I'm waiting for someone to stand up and say, why do we borrow our own currency in the first place?
Like you said, they print the dollar, so why does the government even borrow?
Well, again, some of this stuff gets, some of the language some of the language and concepts are just confusing. I mean, the government definitely prints money, and it definitely lends that money, which is why the government definitely prints money, and then it lends that money by selling bonds. Is that what they do? They sell bonds. Yeah, they sell bonds, right? Because they sell bonds and people buy the bonds and lend them the money. Yeah, so a lot of times, at least to my ear with MMT, the language and the concepts can be kind of unnecessarily confusing, but there is no question that the government prints money and then it uses that money to, yeah, I guess I can't really talk. I don't get it. I don't know what they're talking about. Because it's like the government clearly prints money. It does it all the time, and it clearly borrows. Otherwise, we wouldn't be having this debt and deficit conversation. So I don't think there's anything confusing there.
That is absolutely hilarious. This gentleman, he's confused, and I don't blame him. He actually knows a whole lot more than I think the public knows about modern monetary theory and central banking. The government prints money, right? How do they print money? Well, they lend it. They lend money into existence. They sell bonds, right? So that's how they create money. And the federal government has created a whole lot. Treasury and the Fed has created a whole lot of money supply by lending money into existence, and the whole fractional reserve lending facility has caused a multiplication effect. So the Federal Reserve balance sheet is roughly 9 trillion, maybe a little under, and it's gone from under 1 trillion in 2008 to 9 or 10 trillion over the next 10, 15 years. And yet through a multiplicative effect of fractional reserve lending, the money supply in the federal debt has ballooned by much more than that. Federal debt is 34 trillion, and M2 money supply has absolutely exploded. I don't think a lot of people understand our money system. Our money system is fake. It's somewhat fake. It's an illusion. It's real until it isn't. And there's a lot of difficulty in explaining that to people, that valuations are stretched. The money system is more fragile than it's ever been. Central banking has been able to push this thing a lot longer than we would have thought. Really started 50 years ago in 1971, more than 50 years ago, when we came completely off the gold standard. And it's only gotten worse since. And it's actually gotten exponentially worse post the 2008, 2009 financial crisis / crash. And now nobody really knows what's real. And every single central bank in the world is doing this. And nobody really understands it, even our leaders. Our leaders have to get schooled. If you look at some of the testimony, the Congress and Senate testimony, they're questioning central bankers. Very few of them even understand exactly how it works. How can you expect the public to know exactly how it works? My ultimate point, my ultimate view on this is that the central bankers are unelected and they've got too much power and they've been given too much power, and that's not right. And it's going to take some kind of crisis and reversion to the mean for us to all realize that and hopefully change it for the future.
All right, so I went all in on GameStop. I threw $6,000 and I bought it at an average price of $58. Right now I'm down $700, but I'm not worried. Back in 2020, if you're new here, GameStop price went through the same shit and it rose all the way to $450. And yeah, it was a wild experience and I see it happening again. And it's different because back in 2020, there was no TikTok. It was all over Twitter and Reddit. But now with TikTok, I feel like it's even worse. So I anticipate this to shoot through the moon, So I have 94 shares, and also for shits and giggles, I made a $57 call by 517, and that one's down $110. But you never know. Let's see, right? Let's follow along. Stranger things have happened, and see where it goes from here. Right now, my portfolio is currently sitting at 5,938. Let's see where it goes. Maybe tomorrow it'll be double. Maybe it'll be half of that. Who knows, right? Let's find out. Thanks.
So this gentleman's talking about GameStop, the whole meme stock thing. And then this happened back in 2020, almost 4 years ago. We had AMC, GameStop, we've had NFTs. There's the whole crypto rally, and part of the crypto rally is real, but there's a lot of ancillary tokens in there that are just completely hype and not really probably going to amount to anything. But this gentleman talks about, well, look at my portfolio. Maybe it'll be double, maybe it'll be half. Let's see. The truth is, this is just gambling. This is just a guess, just hoping for the greater fool, hoping for the momentum to carry these things higher. And guess what? If it doesn't happen, there is no plan. It's a very, very psychologically difficult thing, and it's a trap. You got to hope that more euphoria will come in and bail you out and push prices higher. Otherwise, who are you going to sell to? This is just really indicative of the time that we're in. I believe that this is all going to be wiped out someday, and that we're going to revert to some kind of normal, some more equilibrium. But what else can you expect? We're 50 plus years into money that's not connected to anything. And central bankers in the last 15 years have gone completely off the reservation, not just here, but everywhere around the world. Bank of Japan, European Central Bank, the United States Federal Reserve. And so it's just a continual game of shuffling chairs and thinking that more euphoria will set in to bail us out of bad decisions. And I understand that human nature is optimistic and we want to think that technology will always lead to a brighter future. But I happen to think we're at the climax or near the climax of a fourth turning. And while the future is always bright, particularly once you get through these climactic times, they're not bright for the people that have to survive and suffer through them. And I think that we're in the climax of a fourth turning. I think it's no surprise that we have such distorted, ridiculous financial things going on. This is what you'd expect. And I also expect that it'll be a time of maximum effort, maximum risk as we enter this climax. And a lot of these things will be wiped away. And I think we'll learn that there was no grounding in reality, these things. And it was sure fun while it lasted, yet it hurt. It's going to hurt a lot of people. And frankly, it's going to benefit and has benefited a very small portion of the people. And that is those that have the assets. The very wealthiest people in America have had their assets go up multiple times over. And so, of course, the whole thing could crash and these people would still be fine. But the truth is, the average person, like the gentleman that you just saw in the video, I don't think are going to benefit overall from this. And in the end, they're probably going to lose what they have put into this. Most of the people, like the young people that are on TikTok or advertising and putting these type of videos out there, don't really have anything other than, hey, let's see what happens. I mean, that's the definition of a gamble, in my opinion. Hopefully this was fun. And hopefully this is some feedback from a professional that's been in this business for well more than 20 years is useful to you, that you can use this insight in your everyday life. And maybe it stirs up some questions or some ideas. Feel free to put them in the comments below. Reach out to us in the link in the bio. Again, please subscribe to this channel. We really appreciate you watching and giving us feedback. And we're just here to educate and give you some data and hopefully some experience that you can use in your everyday life. So it was fun for me. Let us know if it was fun for you in the comments. We'll do more of them. Maybe even get a little more edgy if you think it's fun. For now, thank you so much for watching. This is Mike Preston at New Harbor Financial Group. And until next week, see you later.